Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Rosari Biotech IPO, whether the IPO is good to subscribe to or whether you should avoid it and buy later on declines. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Rosari IPO, here is a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, to help you also ask me questions in detail. One question per day for anybody who takes the $10 membership. Also, he'll have access to my watch list and portfolio, and also a number of podcasts that I'm beginning with. So I bring in podcasts virtually every day on Patreon about the markets and some of the stocks which could do well in the short run. If you want direct analysis on stocks, particular stocks or investments, you can email me and we can work things out with that. Now about Rosari Biotech IPO. Established in 2009, Rosari Biotech provides specialty chemical solutions to most personal care brands, and they also serve textile and animal healthcare industry. So they are providing specialty chemicals to a variety of industries, verticals, as well as to companies all across the board in India and abroad. 80% of their business comes from India, 20% comes from abroad. Clients include in the, you can say, in the personal care segment, clients include Lifebuoy, Vim, and Comfort. The personal care segment is the fastest growing one, although the largest segment of it is the textile segment. The personal care is not the largest one, and the smallest one is the poultry farming and animal health care. It is a brilliant play on Indian consumption as consumerism takes shape going forward. The stock will continue to do well. At 425 rupees when it will list, it will be trading at around 33 times earnings. The current EPS post the listing and the shares in the market would be around 12 and a half rupees. That is my assessment. You can do your own analysis, but all the data that I have collected from a number of websites, I have come to a conclusion that the EPS of the company would be around 12 and a half rupees. Now looking at the financials, the sales have grown by 17% for FY20. Now this is FY20 versus FY19 earnings. So this is whole year. So 604 crores of sales versus 517. Profit or PAT is 65 crores versus 46 crores. So this is a very good improvement of around 41.3%. Low debt company will repay most of the debt through the IPO proceeds that would come in. Have consistently grown over the years, and the profit has grown by 40-45% consistently over 3-4 years. Return on equity of the company is around 20%, just about there, 19 to 21%. Net profit margin is around 11%, which is quite good. This is not operating profit margin, but this is net profit margin. So overall numbers look quite robust. But then whether 34 times, 33 times earnings, if it lists at that point of time, is quite fine or not, we need to understand that. So if you look at the performance of the company, I cannot give you performance of the stock because the stock is not listed. The company, the personal care, is growing at a very fast pace, and this is the fastest growing segment. The major business, as I explained, comes from the textile segment, which might not be doing that well, as we understand that the textile and garments industries across the globe has been hit sharply with respect to the pandemic that we are facing, and hence because of the social distancing norms, etc., there are many textile firms that are closing down. So as most of the business comes from that segment, it could be hit badly in this pandemic. The return ratios are strong, but we have to see how the numbers in June and September would look like. There has been strong sales and profit growth over years, so there's no denying that the sales have grown by around 20 to 25% consistently, and the profit has grown between 40 to 60% consistently. That is low. and it also serves the pet care and poultry businesses. So a very small portion, but there is an increasing stake into this segment as well, and they serve many poultry brands and also the pet care brands in India and abroad. And this is a unique thing in this company, and this could end up being a USP. We have seen how animal care companies are very less listed and they are doing well, and I talked about one of the nice animal care company, vaccination company, in my multi-bagger pick earlier. And there are companies which gives feed to fisheries, that is Avanti Feeds, which are into it. But this is another one which is into poultry and into pet care. So, whether to subscribe to the IPO or not, well, the positive thing is that it has diversified business segments. So they are into textile, they are into FMCG products, into you can say personal care, and they are into animal care as well. So this is a very big positive for such a company that are producing the chemical. They are not into a set domain, not in just enzyme building, not into food production, not into food. You can say into the business of food or into healthcare or personal care. They are into different domains. It is a raw material provider to poultry and animal sector, which is a rare thing. As far as I'm concerned, I don't remember or know about any other company which provide chemicals for this sector. uh, most chances will open at a premium, this company, as it has many clients and sectors to serve to. There is a good chance that it can open at 25-30% premium to its price, at least 10-15% premium to its you can say IPO price. It is a good quality small cap company, and valuations are not cheap. So this is something which is a negative in my understandings. The valuations doesn't look cheap at 33-34 times earnings at 425 rupees. It is not cheap. I You look at companies, although it is in a different chemical domain, say an SRF, Veneti, Aarti, etc., they all are trading at 20, 22, maximum 25 times earnings currently. So this will just open up at, even if it opens up at 430, 440 rupees, it will be at 35 times earnings. And if there is a premium, say it opens up at say 550 rupees or 540 rupees or so, 100 rupees, 120 rupees higher, then then the PE goes beyond 40, which I think is stretched for such company, because over time you will see that the earnings may go down, so EPS will reduce because of the number of shares in the market, etc. So that potential of the earnings growth will reduce slightly. So you have to take that into consideration. Even I am confused, but uh, for immediate gain, I think there is a possibility that you will get immediate gain of 15-20%. And so for immediate gain, for somebody who wants to get into an IPO, he can do that. So my take on the stock is that may subscribe and book profits on listing. There could be a chance that we could have a 15-20% profits on listing. But we have seen what has happened with SBI cards, and it really went under, and 775 rupees opened at 600 and went below it closer to 500. So one has to be extremely careful. Another thing is that in the IPO you won't get a number of shares. You might get for 50,000, 40,000, 30,000 if you want to invest less. But if you want to invest big, 2 3 lakh into the company, then you would have to go through the route of after listing and buying into the company. I am of the opinion that somebody who wants to invest can do it after listing. That is a better option on major declines, and once the June numbers also comes in. So wait for major declines is a better option. Valuations are not very cheap, and you have to understand that. It can give listing gains, but again I am stressing the fact that 33 times is not very cheap. So this was my video on Rossari Biotech IPO. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.